Hey traders, welcome to Charts and Coffee. Hope everyone is doing great. I hope you had a great weekend. I know a lot of you joined us for our weekly pre-week show. I don't know what you can call that, but our weekly pre-week show, prepping for the week we have coming up. So far, it looks like it's going to be a fairly drama-filled one. One of the interesting things that happens when you look at the overall week, right? You look at all the hot zones that are sprinkled throughout the week. We don't have that many this week, which means some of the lesser economic data releases, some of the lesser FOMC members speaking are going to have more of an outsized impact on the market behavior. FOMC meeting minutes, that's about as much as we're going to hear from the Federal Reserve, other than any speaking engagements that might be scheduled for the remainder of the month. But that's going to be probably the biggest thing this week, where we get a little bit of a fly on the wall view or idea of what was happening surrounding the previous decision on the rate. So again, those meeting minutes are kind of listening in on who was dissenting, what the other ideas were, what are the tailwinds that they're expecting the market, the economy to have, what are the headwinds they expect the economy to have, what are their ideas on inflation. But rest assured, it's very curated. It's not, a raw look at what was happening inside the hallowed halls of the Federal Reserve, but rather, what the Federal Reserve wants us to take away as far as to the undercurrents of that last meeting decision. All right. So with that being said, we have there's some questions already queued up. So, the calendar isn't a big part of the week, although, again, keep an eye on Wednesday's FOMC. And then we also want to remember that, again, even usually lesser hot zones. And let me show you what I mean by that. Let's take a look really quickly at, today. Empire State Manufacturing, NAHB Housing Market Index. Usually, they're going to be somewhat market movers, but far more because of just the vacuum of higher impact hot zones. We do have a number of housing releases this week, which could put the ITB, XHB, and the stocks that are heavily weighted in those sectors in play in a much more significant way. So I'm definitely watching some of that. All right, for sure. All right, so let's kick it off with our first question from Marla, who asks TLT. Let's take a look. TLT is moving up. That's on calls for the week. So if we're looking at TLT, what we're really looking at is the ZB, right? Our 30-year futures contract, and then we'll map over to the TLT as an alternative of how we can express this idea. ZB futures, right? Options on those futures, and then options on the TLT ETF alternative. That being said, as far as moving up, well, let's dive in a little bit deeper on this symbol here. So if I've got a pretty steady yellow neutral trend and pretty steady bullish momentum up until just recently when it went yellow again, I don't want to be bearish here, but I want to remember that this is not an uptrend quite yet. So buy the dip is not valid. What I want to remember in terms of calls for this week, if I'm going to focus on the long side, it's going to be off support. Not so much with bullish momentum, but thinking more along the lines of where is there support, Darvis support, previous lows, things like that. And how can I buy a low to look for a rally to the upper end of the range? That's it. We're going to stay in a range until we don't, right? Or until we have the double green trend that validates buying the dip. So a little bit of a flux here right now. But Marla, yeah, it's definitely good to be thinking about what if bond traders are ready to start discounting lower yields. You might think, Rog, we're still in a tightening cycle. Is it time to discount lower yields? It looks, remember, bond traders probably more so than any other type of trader like to front run Federal Reserve action sometimes months and months ahead. And as long as we stay peaked and plateaued at that December 3.5 to 3.75 target rate probability, bonds are going to start to say, all right, let's factor in that, especially as we go into the September contract for bonds, the December contract for bonds, the next March contract for the long bond, we're going to see that lower yield really start to get discounted. So, all right, great question. Kicking it off with some bonds. I love talking about the interest rate, especially in this environment. Next up, how do I decide on the strike price when buying an option? Pretty simple. I keep it very simple. It's usually at the money or slightly in the money. That's really it. Hey there, JP. Here to pre-game prep with Rog. I'll see you all in the Sector Secrets Mastery for our morning day trading here in just a little bit. So we've got that coming up Monday through Friday in the Sector Secrets Mastery, trading my favorite hour of the morning. All right, good to see you, JP. All right, Sue asks, I'm short Amazon. Is it better to cover immediately or wait for a pullback? Sue, I'm not sure what your trade is, right? I don't know where you're short from or why, for that matter. It's tough to come in. All I can tell you is what I see, and then you take away from that what you will. Amazon turned into a double green uptrend by August 3. So if your trade was after the 3rd, my only suggestion would be once we have a double green structure, 8, 13, 21, 34, suggesting the path of least resistance is to the upside, let's take the short setups off the table. Second part, are we starting to get some traction above the 200 exponential? Also, around the same time, around beginning of August, that answer is a yes. Okay, so again, another reason. As far as, we could have a down day, but I simply don't have a short. If you're waiting for a pullback, again, I don't know what's going to happen clearly. But if we have a down day, what I would tell you is let's do this. We don't know what's going to happen today. We might be starting off strong. We might be starting off weak, whatever it is. Look at the market at 10 a.m. Eastern. Step one, wait till 10. Don't worry about the clearing. Let it do what it's going to do. So wait till 10 Eastern. Know in that 30 minutes, you've got some time to figure out what's your point of validity for this trade. What's that technical or price-based level that if we were to break, you're out? What's your paper cut stop loss for the trade? What are you allowed to even risk to the downside on this trade? Sort that out in the first 30 minutes, stick with that plan, and that will map to the discipline of knowing why you placed a certain stop and just following it when the market doesn't do, what it is you're hoping it was going to. All right, do I use scanners for short-term trade opportunities? Arthur, I don't use scanners for anything. I've never been a fan of scanners. I don't like to scan hundreds and hundreds of symbols to come up with a list of symbols that I don't have any understanding without further research of where they're weighted within the passive investing universe. How are they weighted in the indices? How are they weighted in the sector ETFs? What is their relation to each other? So I'd rather look at my multi-charts and look at a fairly broad but curated list of names. Now, it could be 3, 4, 5, 6, 7 dozen names because you think about all the stocks that are weighted within, say 15 to 20 sector ETFs. You've got plenty to work with. I don't see the need to scan the entire universe of equities when, in fact, high concentration weighting is far more influential than just about any other force in the markets. And that has been the case since 2008. And that will continue to be the case when you look at the composition of the indices, when you look at the composition of the ETFs that we like to trade the most. You'll notice it's really only 2 to maybe 5 or 6 stocks that have a disproportional weighting in that index or ETF. So it's just a handful of stocks that are moving almost everything, right? So no, I don't use scanners, and that is why. All right, next up, how's oil shaping up? Still in chop or getting into an uptrend? Thanks and have, you too. All right, how is oil shaping up? Last time we checked crude oil, he asked if it's getting into an uptrend. Oh gosh, no. Al, no, my friend, great question, but just the opposite. By the 3rd of August, whoosh, double red, south of the 200 propulsion, consistent red grab candles, really the more aggressive, really by about the middle of July, around the 15th to 18th of July, we were already in a more aggressive uh, definition of a downtrend. And then easily 2 weeks later, full on double red. So this is a downtrend. Chop? Nope, nope, not at all. This is a full on downtrend. So thank you for the question. All right, next up, Maruf asks, is the QQQ still bullish? Well, we're going to do what we did earlier when it comes to a symbol, an ETF that has a futures alternative. We're going to go to the futures first. And that is going to take us to the NQ. The NQ is in an uptrend. It's been in an uptrend specifically since the 5th or 8th of this month. So August 8, August 5. I think what is most interesting about Friday's action is, unlike previous tests of the 200 exponential, Friday we were able to close above that 200 exponential. That's big. That's meaningful. Even though we might be a little lethargic today, look, there was a rate cut in China yesterday. There was some negative data in China. So think about what we inherited in terms of moving from the Asian session to the European and UK session, now to the US, from 8 p.m. last night to basically 9 a.m. Eastern this morning. That's what we inherited. And I'm not surprised to see a little bit of weakness, but at some point, equity traders are going to shake that off because, frankly, China data isn't as important as it once was, I don't think, to trader investor psychology. Not that macroeconomically or economically it's unimportant, but it really does seem, with the way KWeb, EWeb, FXI, MCHI have been moving, when you look at investor and trading psychology, they're pretty much numb to it. And these markets have been weak for a really long time. So more negative data is already hitting a fairly negative opinion. So if we're already heading left and we're heading left some more, there's no surprise there, right? It's not as if all of a sudden China has just been this screaming bullish market and now there's negative news comes in. Negative news on top of an already negative sentiment. There's no shock to the system, right? Does that make sense? So I think that because of that lack of a shock to the system, if indeed some of the bearishness is coming from that, and you could go back intraday and ask yourself, when did the bulk of the weakness come in? Was it during the Asian session? Were we already starting to head lower after 8, after 4? I would look at 2 times to see if the Asian session was the influential time. 8 to 9 p.m. Eastern, that would be Sunday evening, or even more effective, what was the closing sentiment in Asia? And you're going to know that between 4 and 4:30 a.m. So you look at the 4 and 4:30 a.m., which is right in there, segment of time. You're not awake. I'm not awake. Oh, actually, I was awake, but I wasn't looking at this. You look at that 4 to 4:30 a.m. Eastern and ask yourself, was the closing sentiment for the Asian markets, was that fairly bearish? Is that where some of the weakness started to kick in? Really, you can see the weakness starting to kick in with London. Why do I know that? It's around 3 a.m. Eastern that we started moving lower. So London came in, looked at whatever data was happening there, looked at whatever data preceded it and said, no, sell button, right? That's the way it works. And you know who it is. You know who it is based on time. Who and what? It could be data. It could be a financial center. So as far as that, I do anticipate that data getting shaken off pretty quickly. Staying above the 200 propulsion would be ideal. So because of all those things, expect some volatility between now and 10 a.m., Maruf. But the uptrend is still intact. It is double green on NASDAQ, and then that plays out. Yes, I'm still bullish on the Qs. You bet. All right, Jeremy asks, correct me if I'm wrong, but it seems I use at the money options more than in the money options. What's my reason for doing so? It works best for me. I don't see any need to go too far in the money. I don't have the need to go with exceedingly high, say 70 plus delta. It just doesn't. I don't need it. I don't need it. So why pay for more than I need? That's really it, Jeremy. Can you go in the money with what I do? Sure. Can you go out of the money with what I do? Sure. But I find the best balance of cost and effectiveness comes with that at or slightly in the money option. And that's why I do that. Thousands and thousands of trades, and 3 decades of Tommy Rugg. It just works, and that's why I stick with that. And it's easy. It's easy. All right, next up, on July 7, I speculated the market bottom based on the CME Group website for the Fed funds rate, FOMC. Yes, that was part of it. That was a big part of it, Wes. I did. What combo of tools you use next to perhaps determine a top? I don't. I don't. And I'll have to see what we have, Wes. I don't pick a bottom any more than I pick a top. I was just saying that because the Federal Reserve is just about done, that it's time to start remembering that the sentiment is going to shift. I'll see when we look. We're not even in an uptrend that's been established for more than a month yet, so way premature. But it's going to be the same tools, Wes. It's going to be the same tools. But golly, I mean, who knows when that's going to be? So same idea, same tool. So let me answer this in the best way that I can. Whatever I used to determine a bottoming process macroeconomically, I've got to go back and use those same tools. What are the mandates for the Federal Reserve? And then how is the rate of change of those particular, growth, inflation, jobs? How is that playing out? Money supply, etc. The way that if I were to jump tools, if I were to use one set of tools now and another set of tools then, there's no consistency, and chances are I'm curve fitting what I want to see, right? I'm curve fitting what I want to see. And the only way to avoid that is consistency. You want to kill curve fitting, you find settings that work and stick with them. You want to kill curve fitting, you find a set of tools from a rate of change basis and you stick with them. You can find sort of an amateur approach to the market when it's always something new, right? Today it's this market internal, tomorrow it's this data point, then it's this stock, or I'm going to change the settings of an indicator every 30 days, whatever it is. That's noobville, right? That's newbie stuff. They'll grow out of it. They'll learn. And I tell you that because, well, go back to 2.5 decades, I didn't know any better. And I had to learn that to be where I am now, which is the consistency is where it is. So I'll use the same tools. I hope that makes sense, Wes. Thank you for the question. All right. What is my insight on XOP? Sure. All right. XOP. North of the 200, yes. Uptrend yet? No, not yet. XOP, by the way, is not a high concentration weighted ETF. So there's not a single few handful, right? And XLE, by the way, it's 2 stocks, Exxon and Chevron, that have a disproportionate weighting. OIH, it's Schlumberger and Halliburton. Again, disproportional weighting. XOP does not have that. There's not 1, 2, 5 names that are really going to be outsized in their influence on this. So we really do need to look at the tide and not the individual boats. Not there yet for me, but it sure is working on it. If we're looking at an uptrend being a process of being able to put a check in different boxes, one of the most important is, are we neutral yet? Do we have more green grab candles than anything else? And are we above the 200? So those things are there. We just don't have enough. We just don't have enough to say the trend has gone bullish. The momentum is bullish, no doubt, has been through most of August at this point, but the trend has not gotten there yet. All right, gang, as always, thank you so much for being a part of our Caffeinate and Dominate crew, our pre-market brew. All right, gang, I'll see you tomorrow, same time, same station. Remember, the weekly breakdown you can catch over at the Simpler Trading YouTube channel, and I am here each and every morning. We have been now for almost 2 years. Charts and Coffee, 9 to 9:20. I'll see you tomorrow.